Hello and welcome back to another video on cash and cash controls. This time we're going to look at petty cash. This is a fund that companies will establish to pay for small amounts of cash for small purchases. So a small amount of cash is kept on hand to pay for small purchases, and there are three simple steps. You first create the fund, you recognize the expenses that are incurred using the money from the fund, and then you replenish, that is, you put money back into the fund. We'll also talk about credit card and debit card purchases made by company employees. This is in order to pay for small purchases. So let's take a look at the journal entry that you would have to establish the fund. So a company takes $200 out of their cash account and puts it in the petty cash fund. So they're both cash accounts, petty cash and cash. Petty cash is cash, that's currencies that you have on hand, and cash is a checking account that you have. So when we talk about cash and cash equivalents, it's all the same, it's still cash. We've just moved it from one form of how we're holding the cash to another. So we have established an account with $200 in petty cash. Now, at the end of the month, we have various purchases that have been made. From the petty cash fund, we paid for lunch. We spent $60, and we paid for delivery expenses, $90. Then the purchasing manager used the credit card to buy supplies, a total of $1,400. The marketing manager spent $1,500 on advertising and $1,200 on postage, again using the credit card. So we'll see how we'll record these by way of a journal entry. So the $60 and $90, the lunch is called advertisement expense, $60, delivery expense, $90, and those two added up is cash credit, $150. We'll see why cash is credit $150 in a minute. Now the remaining amounts, supplies of $1,400, supplies debit $1,400, advertising expense debit $1,500, postage expense debit $1,200, accounts payable credit $4,100. That's all the credit card amount because that has still to be paid. We spent the money, but we have not paid. These two, we spent the money, we incurred expenses, and we paid cash for it immediately. So let's focus for a minute on entertainment expense debit, delivery expense debit, and cash credit $150. We credited cash, but not the petty cash fund account that we created in the previous journal entry. What we're doing over here is we are cashing $150 from the bank again. We're taking out $150 from the bank, and we're going to replenish the account that we have created, the petty cash account that you have created. So that takes care of the petty cash. Now let's take a look at a quick exercise going over the same information before we get into statement of cash flows. So we have a company here, Halle Farm, that establishes a $200 petty cash fund on September 4th to pay for minor cash expenses. So let's first do the journal entry to establish a petty cash account. So this is on September 4th. The journal entry is going to be petty cash debit, cash credit, and we know the dollar amount is $200. So we basically withdrew $200 from the bank, and we have an employee who is entrusted with the $200, a petty cash accountant or fund manager, and they have the $200. They're responsible for spending the $200 and collecting receipts so that we can do the journal entry. At the end of September, the fund contains $30 in cash, which means we've spent $170. The company also issued credit card and authorized its office manager to make purchases. Expenditures for the month include the following. Entertainment for office party, $170, is specifying and saying this was taken from the petty cash fund. Then we have lawn maintenance using the credit card, postage using credit card, fuel for deliveries using the credit card. So let's go ahead and do our journal entry. On September 30th, we have entertainment expense debit and cash credit, and that's for the money that was used from the petty cash account. What happens when they told us we had 30 remaining and they have bills? They have receipts for the 170 that was spent. Let's say they have receipts for 170 that are spent and only $10 was left with the manager. What happened to the other $20? Well, you need to look and see where the receipts are for the $20. And if you can't find the receipts for that $20, you're just going to debit miscellaneous expense. The amount is not significant. It's not material enough for us to do anything about it. However, you do need to have a talk with this petty cash manager and say that they need to make sure that they have receipts for every last dollar spent. And some companies, after some point of time, after having a couple talks, they may tell the petty cash manager that he or she has to come up with that difference that is missing. Okay, now let's carry on and look at the other credit card expenses. Again, on September 30th, we'll do the journal entry. We have lawn maintenance expense debit, postage expense debit, fuel expense debit, and accounts payable credit, because these are all credit card transactions. I've not yet paid the cash. And my journal entry over here is lawn maintenance expense debit 420, postage expense debit 575, fuel expense is 285 for a total of $1,280. So again, we established an account for $200 for petty cash. We incurred expenses at the end of the month. We're going to do the journal entry. And in this process, we are replenishing that $200, the $170 that was used up. We add that back to the petty cash account. Again, these numbers are not significant. Therefore, you don't want to use your credit card for some of these expenses. This is a total of $170. It may have been spread out over several days. Okay. So this is a quick example of petty cash fund. Lots of companies still use it, but more and more companies are now going with credit cards and debit cards to manage this and stepping away from cash altogether. However, if a company does use petty cash, this is how we would do the journal entries.